Welcome back. We're speaking with Phil Davis, founder of philstockworld.com. We just spent some time reviewing the MoneyTalk portfolio as part of Phil Stockworld's look at everything that they have. And again, the link, you can find it and see it on the screen. Phil, you've got a couple of picks here that we're going to talk about. And again, reminder, everyone do their own research. Make sure it makes sense for you. Are these new picks? Are these revisiting old picks? Because some of these names are familiar to me.
Probably, yeah. I mean, things go in and out of the portfolio. So SunPower for sure was our stock of the decade, is our stock of the decade. And it's only 3 years into the decade. We've already played it from like $5 to $40 and gotten out. Now it's back today. In fact, it's an amazing opportunity because today they lowered their guidance. It wasn't even earnings day. They lowered their guidance, and the stock plunged back to $9.50 from I think 12. It's been a rough year for them. We knew it was going to be a rough year, but they're in position to make good money. Maybe not next year, but the year after that. And it's a great time to put them back in the portfolio. So we're very, very happy to take a new trade on it.
Okay. And obviously, it's good news if you're a long bull on this, which you are, to be clear. If you own it, not so great news. But tell us how you're constructing this trade, given what's happened today.
All right. So step one is we're fundamental investors. So we pick a value that we believe is sustainable for SunPower because we intend to be in it for the long term. So despite the fact that it's fallen to $9.50, we decided that we're willing to take a risk and sell 10 of the $15 puts. So we collect $6.50 for the put. So if you put that by itself, you're really netting in for $8.50 into the position, which is a dollar less than it is now. But we're using that money. We're going to collect $6,500 for selling the 10 puts for $6.50. And these are 2025 puts, of course. And then we're going to buy a spread, what's called a bull call spread. And the bull call spread is we're going to buy the $10 calls. We're going to buy 50 of those for $2.85. And we're going to sell 50 of the $18 calls. So it's a 10-18 spread, which is out of the money at the moment. So it's basically it sounds aggressive. It is aggressive, I mean, compared to where it is right now. And those $18 calls are $1.20. So the net cost of the entire spread, though, is $1,750. And your only risk is the assignment of 1,000 shares of SunPower at $15, which obviously it's currently $9. That would not be ideal. But let's say it drops to $8, you would lose $7 a share. So your risk is about $7,000 on the spread. But we are think it's extremely likely they're going to bounce back $12 to $15 range. This whole trade will work out fantastically. If we get to 18 in 2025, mind you, in 18 months, the upside potential on this trade is $38,250 from the $17.50 investment. That would be 2,185%. I mean, it's just amazing. This is, we don't usually like to take out of the money trades. We prefer to be in the money with our trades, but This is just such an opportunity to leverage this position that just dropped today.
Can I ask those? So just again, like you've outlined the risk and what the upside and downside is, but what is it like? I mean, is there a scenario like if the market is kind of, hot right now and we get into you get into a place where the market's kind of down for the next maybe 1 or 2 years? I mean, could that hurt them, even though fundamentally I know you like the company?
Absolutely. A recession's going to hurt everybody. And look, let's say SunPower, don't forget, okay, so we end up buying 1,000 shares for $15. That's our obligation on this trade, right?
Yep.
So let's say SunPower is $5 in 18 months. So it's actually at $5. We have to buy 1,000 shares for $15. So we take, and this is a planned allocation. We always have 50% on the side to double down if we have to. But in this case, we could buy 2,000 more shares for $10,000. Then we will have spent $25,000 for 3,000 shares, and we'd be up around $8 a share, $8.50 a share, let's say, in total cost. And then we would sell more calls, and we sold these $10 calls for $2.85, and we would drive the price back close to where it is at $5. We'd be maybe at $6 instead. And so if if you're telling me a stock can drop 75%, I'm sorry, 50% from where it is now, a stock can drop 50% from where it is now, and all we would be down is about $3,000. That's pretty damn good. But that's the power of using options.
Yeah.
We don't buy them. That's a big mistake. We sell the options to other people and collect the premium.
Yeah. And again, so consistent with everything you've always taught us. I've only got 2 minutes, Phil, and I apologize because we've got still one to go. So let's talk about Love, L-O-V-E. So
Lovesac, this is a very big point. The main point on Lovesac, they are treated like a furniture company because they sell furniture. But they're really a tech company who sells a product, and that product is modular furniture. And the difference, if you go to the website, you'll see the difference. But they have one thing they sell, and it's a cube, right? A couch cube. They build couches and chairs out of the cubes. You can rearrange them and change them and so on and so forth. But the point is, they don't have 45 types of furniture and different inventories and everything is late and delayed. They've got stacks and stacks in warehouses of cubes. And when you order it, they just hand you the cubes and say, here, configure it how you wish. And and the cubes then get covers and so on and so forth and customizations. People love it, and it's great. It's a little expensive, but again, you're hitting a high-end market where people just absolutely love this sort of stuff. And for that trade, we're selling the same kind of thing. We're selling 10 of the $25 puts in January 25. We're buying 20, double the amount of the 2025 narrow spread, of the 2025 bull call spreads. In that case, we're netting in for $3,500 on a $10,000 spread. So this is more of our normal conservative stuff. SunPower, we're going for it, but Lovesac is our normal conservative thing. It's still going to make $6,500 on a $3,500 investment if we hit our $25 target. I mean, still phenomenal returns with not taking a big chance on this one. But that's what we normally do. We look for big returns, conservative plays.
All right, that is a roundup of both the picks, and we got Lovesac in there. That is great. Phil, it is always a pleasure. Be well, and we hope to talk to you again really soon.
Thank you, Kim. You too. Have a nice summer.
Yeah, you too. That is Phil Davis, founder of philstockworld.com. And that's our show for tonight. Remember, take risks that's appropriate for you. Take a look at these trades, but you got to do what makes sense for your own personal situation. Reminder, any comments or questions, or if you'd like to get in touch with us, talk to someone, talk to an advisor, you can email us at moneytalk@td.com. Thanks so much for watching tonight. I'm Kim Parlee, and we do hope to see you again next week.
The preceding paid commercial program was brought to you by TD Wealth.